We might be watching the rise of the world's first private energy empires. Big data and AI companies, the biggest in the world, are now investing in energy production directly in the form of nuclear. Now, this horizontal marriage between big data and energy would create a paradigm shift greater than anything we've ever seen. This would be the biggest geopolitical and economic headline in a century. I firmly believe that. Welcome to the Jay Martin Show, where we dissect the greatest minds in geopolitics and finance. My guest today is Scott Melby. Now, Scott is a veteran of the nuclear sector. He previously served as president of Cameco USA and presently serves as president of Uranium Royalty Corp. He's coming in from Washington today. He was recently at the inauguration. He is up close and personal with the decision makers in the White House and more on the street than anybody I know when it comes to nuclear adoption and trends, whether that's big tech investing capital or nuclear buildouts in China and America. Today we get into all of it. Fascinating conversation with Scott Melby. I know you're going to enjoy this one.
This is Jay Martin.
All right, here I am with Scott Melby. Scott, it's great to see you again. Thanks for coming on the show today.
Jay, it's always a pleasure getting together with you, and especially right now with so many exciting things happening in uranium and nuclear space.
Yeah, big shifts. So I want to talk about all of that. There's like 7 different directions I want to go with you today. And you're definitely the guy to talk to about this. Before we get into that, you're in Washington right now. You were also there a couple weeks ago for the inauguration. What was that like? I'm so curious. I was watching from a distance, obviously all the highlights and all of this. What was it like to be there in that moment?
Yeah, I mean, obviously, incredible honor and exciting to be there and see it all come together and that transition of power. But I think, what's happened in the week since then is probably even more amazing. And it's the pace at which President Trump and his administration is moving forward on so many fronts. And you saw all the executive orders that were put out, literally the afternoon of the inauguration, including, those impacting energy and uranium. It should be noted that, the president is directing the U.S. Geological Survey to put uranium back on the critical minerals list, which is very important for miners, developers to move forward here in the U.S. more quickly. But yeah, it just, it's light speed changes. And I think as these cabinet secretaries, get their confirmation votes through the Senate and they find their seats, and then they really start moving on executing. And the message around energy right now, it's all about energy dominance. And for your viewers, probably most important, like for us in uranium world, energy dominance in a Trump administration means producing enough domestic energy domestically that we're not reliant on foreign sources of energy. And we're so abundant in that production of domestic energy that we're able to export, obviously largely LNG, to allied countries in Europe and Asia. And so when you break that down to the electricity sector, this is really going to favor natural gas and nuclear. And I know that's a bit of change from, the Biden administration came around and warmed, really became proponents of nuclear power over the course of 4 years. It was for a different driver for them. It was nuclear energy's role as a non-carbon emitting baseload source of power that could operate alongside wind and solar. In a Trump administration, it's more about abundance, energy abundance, affordable, reliable, resilient energy. And, thank God that we're embarking on a pro-energy policy at this particular time, because all of a sudden America needs new generating sources of electricity. We haven't had electric demand growth in the U.S. since the early 2000s. And now we're seeing exponential growth. Just, forget about the AI data centers, which is a huge, huge driver. But just even before that, we have electric vehicles and electrification of homes and businesses. And you put the data center demand, and it's really just the cherry on top. But it's really a whole change in mindset that we've been in for many years. And that's on top of the energy growth that we have been seeing from the developing world, where, we've been building big reactors around the world to address needs in China, India, and elsewhere. Now the developed world is jumping on board, and that really favors build out of nuclear power or valuing nuclear power. You mentioned companies like Amazon, Google, Microsoft are valuing electricity from nuclear powers to such a degree that they're going to existing nuclear power plants, trying to buy the power behind the meter to co-locate next to the plant to take that electricity before it hits the grid, or restart idled reactors like 3 Mile Island, Duane Arnold, Palisades. So we're in a whole new world of energy in the United States, and really, I think, favors nuclear energy to a large degree. It's exciting times.
So yeah, and two major threads I want to pull on there. And the first is just you used the word light speed like 3 times, and that really struck me because the goal is energy abundance, absolute independence. And obviously if you can, the cost of energy determines everything else. And we need a production miracle in the United States right now. That's only going to occur if we have access to, baseload cheap energy in abundance. Now I try to view the geopolitical chessboard has been reshuffled over the last 4 years in a major way. And we've seen a variety of symptoms, including hot conflicts. But I tend to look at everything through the lens of U.S.-China competitiveness right now.
Yeah.
Almost everything. Now, when I think about this scenario that you just discussed through that lens, I think about the competition for cheap baseload, efficient energy sources. And when we think about nuclear, how does the U.S. and China stack up right now? Because you could say China's got 27 facilities under production, 150 planned, claims that they're 10, 15 years ahead of the United States in terms of nuclear adoption. But what's your take, Scott? What do you see?
Yeah, I mean, listen, the U.S. remains the largest nuclear energy country. It's 20% of our electricity from the 93 or so reactors that are in operation. But the rate of growth that we're seeing in China, they will surpass the U.S. in installed nuclear capacity by the end of the decade. So they are taking it very seriously, and they are, again, they're coming from the developing world to where, they needed to get, a level of baseload power up to deliver, basic electric needs to millions, billions, of Chinese. So, they do have a jump on nuclear, but I think where I'm seeing American nuclear energy leadership get back on track is really with advanced and small modular reactors. It doesn't mean that we won't build big reactors here and abroad. Westinghouse, obviously, very big in that space. But I think companies like NuScale, TerraPower, X Energy, Oklo, these are all companies that, the U.S. is very good at small modular reactors. We have 104 of them in 84 aircraft carriers and submarines, and they've operated safely and effectively and efficiently since the 1950s. And so, I don't see it being a stretch that we can locate these on land in applications that range from desalination of water, process heat electricity for refineries, driving data center electrical demands, and so we really have that ability to not only build those here in the United States, but I think make a big presence abroad. And you're seeing in really attractive markets like Central Europe, Poland, Czech Republic, Romania. I think you'll see the U.S. make a real concerted effort. And part of that is fuel cycle. We can't sell these reactors around the world and then say, oh, sorry, go get your fuel from Russia. We've got to have American uranium conversion and enrichment to go along, with these American small modular advanced reactors.
Right. Okay. So even though maybe for the last few years, America's been sleeping at the wheel in terms of new nuclear generation relative to China, the new administration is clearing the path, right? The new president, Chris Wright, Secretary of Energy, clearing the path and expediting these processes, categorizing uranium as a critical metal now, and fast tracking a lot of this activity.
Yeah, and the Advance Act that passed at the end of the Biden administration was a good first step in streamlining the NRC in the licensing and approval. I mean, A lot of these tech giants that have come into our space, like Peter Thiel, Elon Musk is a good example. I mean, here's a guy who can design a rocket that goes into space and he can land it back on the launch pad from where it came. They look at a small modular advanced reactor and go, well, that's really cool, but it's frankly a pretty simple machine. It should be licensed in 2 years, not 8 years. And so, if we look at it, we just have to, we can't do it the way we've done it in the past. We can't go, these things can't be double the time to build and over budget. We've got to get our act together and build these quickly because, one, we need the demand. The demand is urgent. We suddenly are facing energy needs that we haven't seen in a couple decades. So I think it's great. I mean, but the Chinese are also, that means that they're also becoming huge consumers of uranium. And so we're in a global resource competition, call it a war if you want, with the Chinese and the Russians on, global uranium supplies. And, I think if you look at the uranium market today, if there was perfect mobility of uranium and there was no geopolitics, we already have a significant 500 million pound gap between now and 2035, maybe 40, 50 million in the immediate year or two between what we consume and what we produce globally. But if you break that into kind of the bifurcation of the uranium market along BRICS and or east or western lines, it gets even maybe more pronounced for the West than the East. I mean, the good news for China and Russia is Kazakhstan is largely falling into their camp. All of their production is eventually going to be consumed by China and Russia. We already see steps that they're taking to make that a reality. Now, the good news is in the West, we have Canada and the United States and Australia, all countries that have underproduced over what their potential can and should be. So, I think it's just we've got to be mindful that utilities in the United States may not think that they're competing with China, but they are, because China's taking supplies off the table that might have been available to come to Europe or the United States. And but there's good things happening in uranium space. I think in Saskatchewan, Canada, there should be a doubling of uranium production in the next 10 years. In the United States, we see 6 companies have restarted or are in uranium operations and ramping up. So good things are happening, but there needs to be a lot more growth because we got to close that gap in a fairly short period of time.
There's definitely a shift in sentiment since this most recent election, and a sense of optimism and the innovative spirit and the entrepreneurial spirit that I see a resurgence of in the United States right now. Do you think that's justified? There's a bit of a new energy, and you mentioned new entrepreneurs playing an influential role in expediting processes that until recently have taken way longer than necessary.
Yeah, I mean, and nothing against my colleagues, that I've worked together with for 41 years in the uranium and nuclear energy industry, but some of them, just can't get their head around this new reality. And I think the best thing that's ever happened to the nuclear industry is have people like Peter Thiel, Bill Gates, Elon Musk come in. There's been remarks by some of the folks involved with Peter Thiel and Founders Fund, people that were involved in SpaceX. And, I'm sure people told Elon Musk that only NASA can send people into space. It's not possible, for private industry to have a role. Well, he proved that wrong. And I think they want to do to nuclear energy, and in some cases the nuclear fuel cycle, what they did to SpaceX. And I find that really positive because they're bringing fresh energy, ideas, innovation, and capital.
Yeah. So that's sort of the privatization of a previously public service, which you touched on at the front end here. We touched on Microsoft, Amazon, Google, Meta, all making or trying to make investments in nuclear power generation directly, meaning in some sense, they're circumventing the grid, going direct to the source to create their own power supply and just expedite this process. Is that how I'm reading correctly?
Yeah, I mean, if they're, I guess the way you look at it, if they're willing to go behind the grid to grab that nuclear electricity, to power their business. And that's the only thing that stands between them and multi-trillion-dollar market caps. they're going to do whatever it takes to secure their own energy. I wonder how long it will take for that to trickle into the nuclear fuel cycle, where, okay, if they're willing to do that, they're also not going to just throw
Right.
themselves to the whims of the future uranium market, and
Good point.
they will be buyers of nuclear fuel or companies that produce uranium conversion enrichment in a very short time. And that changes the paradigm in the uranium market, where the utility, the electric utility company, has been at the top of the food chain, and calling all the shots, in terms of the market. But they're now going to have competition from some of these hyperscalers who are now coming into the nuclear energy business.
So that seems to me like a massive paradigm shift on par with like the Industrial Revolution, one of those moments where you unlock so much productivity all at once. The world takes a while to adjust and everything changes, right?
Yep.
Here we have we have the marriage of data, big data and AI potentially
Mm-hmm.
merging with energy, right? And
Yep.
that's something that I don't think has ever happened before. Therefore, it's tough for us to wrap our mind around the implications. But that is sort of the maybe the new era of the private energy empires on the back
Yep.
of Meta. What's your take, Scott?
Yeah. No, and absolutely. And I think, if the message, if you could sum up the message from President Trump to our industries, and I would say, to the natural gas, oil and gas industry, and the nuclear energy industry, is, you know, get ready, let's go. It's it's
Right.
it's time to build
Mm.
and grow our capabilities. And it's very exciting on the uranium side. We're going into what could be a hyper growth period already in deficit. So, at Uranium Royalty Corp, to have founded the company when we did, and take, sitting now with 24 royalty interests on 21 projects, and have, even if we didn't sign another royalty deal again today, going forward, we have a very nice visibility to cash flow over each 3 years. We see the cash flow from our existing royalty portfolio doubling, and so. But that we're not sitting on our hands. We're actually very aggressively going out and trying to find more royalties, on companies that are going to be the ones that fill this gap. And they might be in Africa or Australia, Canada, US, wherever they are, URC. I'm headed to Cape Town, South Africa tomorrow to attend Indaba and meet with all of the African uranium producers and see what can we do? What do you need to get into production? Is it
Mm.
25, 50, 100 million capital? We'll provide it in the form of a royalty and stream, and allow them to either get into production or move closer towards production. But it's very exciting because we need a lot of new mines built. Many of them need to be online between now and 2030, which is a
Hmm.
pretty high order. But the gap is that real in the near term.
Yeah, and so you're out there allocating capital to these projects. You've got royalties on, the highest grade uranium mine in the world, being McArthur River, right, and also
Yep.
Star Lake, the Cameco projects. I want to dig into that business model a little bit. Actually, one question before I get there, though, going back to the private energy empire concept,
Mm-hmm.
you could see a response from the government that would say we can't allow these monopolies to grow, to sort of horizontally expand into energy, right? They've got
Mm-hmm.
data, they're building out AI. If we allow them to expand into energy, we're going to lose control, right? And that
Yeah.
is a threat that maybe a politician would be scared of. The counterpoint would be, free market enterprise and entrepreneurship is what makes America great. I mean, truly,
Yeah.
and allowing those paths to be carved could be what America needs more than anything in the world. But what's your take?
Yeah. Well, I mean, this is being fought over with FERC and the Amazon transaction with Talon Energy,
That's
where
right.
FERC is saying, "Hey, wait a minute, this is not in the public interest for you guys to take even a portion of that electricity for your own needs." But I think Talon has a really strong argument as to why that does, it is legal, and I think they'll prevail on that. But
Mm,
no matter what happens there, the energy demand doesn't go away. I mean, Amazon's either going to have to buy electricity off the grid that Talon supplies onto the grid and then buy it, or buy a portion of the generating capacity that Talon already has. The demand is there. It's just how it finds the market. And I think, Microsoft, when they restart 3 Mile Island, that's their that's their output. That was a plant that was shut in and fully amortized and was gone. And so, I think Dwayne Arnold in Iowa will be another one that moves forward. We're now seeing people talking about reviving the VC Summer AP1000s that were being built in South Carolina. And I realize these are not easy, or these are really heavy lifts, but that's the low-hanging fruit. So that's what you go after first. But if you can't get any of the existing or partially completed reactors or restart of reactors, then you move on to new small modular advanced. And then you have companies like Oklo that announced they're going to partner with a gas provider in Texas and really bridge this need for data center electricity with gas and nuclear together. What a great concept. And in a state that's obviously has a lot of natural gas and is very eager to see nuclear being built down in Texas. We see the Texas Nuclear Alliance very active in drawing a lot of this new build to Texas, because you also get the economic boost when you draw these businesses to those states.
Yeah. Okay. So, sentiment's moving a certain direction. Demand is definitely moving a certain direction. You were at COP28, where I think the net zero nuclear pledge was made that effectively.
Yes. Yeah. The tripling by 2040. Yeah.
Okay. Yeah. And that was like 22 countries that signed on, including the United States, to that commitment.
Yeah.
Right. So, what are the obstacles? That's what I want to get to now, because, I want to get into the investment case. When these paradigm shifts occur, that's when, your life can change if you play your cards right.
Yeah. Well, when the tripling of nuclear power goal was put out there, admittedly, it's an aspirational goal.
Yeah.
But it doesn't seem so aspirational now that, we're already on track to double nuclear capacity. Just with the existing forces at play. So getting it to tripling, you're going to have to solve workforce issues, training of engineers. Capital is obviously going to require a lot of capital, but we're seeing really positive steps there where, recently or end of last year, you saw a number of the global banks come together and declare their support for the financing of new nuclear power programs. And that's big because, it wasn't that long ago, in Europe that, nuclear was not considered a green, sustainable energy investment. And so it was really penalized in capital markets. Nuclear investments were in the same category as, gambling, cigarettes, and prostitution. And now suddenly we're, very attractive place to put capital, especially if you want carbon-free energy in the mix. And let's remember that, obviously, Trump administration is more about energy dominance and having abundant, reliable, resilient energy, but there still is half, in the United States, people that still value clean energy. So I think we shouldn't lose sight of that fact that nuclear delivers both. We can deliver the abundant energy, and it's also carbon-free. So we do have a bit of a bipartisan advantages there that even gas doesn't enjoy.
Yeah, and I think more people are realizing that the promise that was made on behalf of renewable energy has a lot of problems with it, mainly that, China is the world's top solar and battery producer, and those factories are powered by coal. Those materials need tons of nickel. Indonesia is the world's largest exporter, and they've doubled their coal consumption in order to meet nickel smelting demands. Yeah. So there's this weird paradox that's occurred and is now surfacing, and people are beginning to realize, like, we had this vision, but, the path there is far rockier than we thought it was going to be, and far dirtier than we thought it was going to be. And so, you don't always get it right. Like, you got to try, you got to iterate the plan and pivot, right? And I think this is a pivotal moment.
Well, the big thing, with renewables is, why did we think it could be 100% of our energy supply? They're intermittent by nature.
Right.
They run 25 to 30% of the time. And unless you want to carpet the entire face of the earth with batteries to back up what is a very inefficient way to generate electricity, That doesn't work. And so, can it be a portion of energy supply? Absolutely. But you're going to need base load, especially in economies that are growing and thriving. Factories, data centers, they can't have intermittent power. They need 24/7. So, yeah, it's just we're in a fortunate sweet spot in that we're favored by both the left and the right today for different reasons, but we'll take the support. And you see it. You see it in legislation in the U.S., and you'll continue to see support for nuclear in the new administration. It doesn't change now that Trump is in the White House. In fact, it probably can accelerate.
Yeah, no doubt. You touched on that, and the lifespan as well of this infrastructure, right? What's the lifespan of a windmill? I think it's around 20 years. Like, it's not that long, and then we got to make more of them.
And no one's talking about what I drive from LA to Palm Springs, and I see the original wind turbines that were put up in probably the 70s. They're still there, and they're all broken down and rusting, and no one's cleaning them up. It's like, well, what industry gets to do their thing and then just leave their mess?
Zero reclamation.
Apparently, the wind power industry can.
Right.
So they have land use issues. They have, the wildlife, not just birds and birds of prey and eagles, but you're seeing offshore wind being really damaging to the whale populations there, which I thought I'd never live long enough to see. The people that were going to save the whales when I was a kid are now killing the whales with offshore wind. So we've gone complete circle now.
There it is. All right. So, I firmly believe we'll only really pivot major industries, especially something as big as energy, when the economic incentives are there to make that shift sustainable. Government subsidies won't make it sustainable. Tax incentives won't make it sustainable. Cultural sentiment is not enough to make a sustainable shift. We'll only stick to it if the economic incentive is there, meaning the new thing is more cost effective than the current thing. Yeah. So, and we've seen that, right? From, human labor through to steam, to coal, to oil. The new thing was always more cost effective than the current thing. That's why we made that shift. Yeah. What can you tell me about the cost effectiveness of, uranium nuclear versus hydrocarbons as we're using them today, Scott?
Yeah. I mean, listen, full disclosure, when you're building a first of a kind small modular reactor, that first one is going to be very expensive, which is why you do see governments like the United States, Canada, UK, all being very supportive of those first demonstration projects. But as they're demonstrated and they are running, and then you move to more of the Henry Ford economies of scale, built-in factories, shipped on site, the next, 2, 3, 4, 5, and, the 10th one built, can be very cost effective, compete with gas and everything else. But there is a curve here that, we're going to have to overcome the first of a kind units to get, to hit a stride. But listen, I think we're going to need all the energy we can get. And I think, that's why I think natural gas will be immediate beneficiary. But even, in listening to that industry, they have constraints with pipelines and production, and maybe the gas isn't always in the right part of the country where the energy is needed the most, and weather issues and everything else. So I think we've just got to, we've got to tackle these problems. And I think if you have people like Bill Gates, at TerraPower, selling his first of a kind reactor to people like Warren Buffett at Pacific Corp in Wyoming, that's a good first of a kind. And, I think as they prove that up in Wyoming, you'll see Bill Gates be building these all around the world, and certainly alongside their data centers, but even beyond that.
And that's the benefit of the private enterprises. You let the Bill Gates, you let the Amazon, you let them iterate those first projects, right? And figure out the more cost-effective models, determine those economies of scale so that we can move forward at scale and with speed. But someone's got to make those bets, right?
Yeah, absolutely.
And who better than the private sector? Definitely better than the public. Yeah. Okay, so I want to talk about URC. I want to talk about the investment case here, Scott. So everybody who watches my show, we're all retail investors. That's who I talk to. That's who I am. I'm looking for the smartest home for my cash. I see a a pivotal moment like this, we've discussed it as a paradigm shift. I believe that's the case. I think that the shift from towards nuclear, especially driven by the world's largest data companies and wealthiest companies to expand into energy production, could be the most significant geopolitical and economic event that we've seen in decades, right?
Yep.
I think
Agree.
that's the case. Yeah.
Yep.
Okay. Industrial revolution all over again. I want to be positioned properly. And you have built a company called Uranium Royalty Corp that is effectively trying to position properly right here. So walk me through the business model, how you're positioned, how you're allocating capital, and how you're intending to leverage this transition.
Yeah, so you'll recall we launched the company publicly in December of 2019 and subsequently listed on the NASDAQ, which was a great move in terms of our trading liquidity. But we didn't want to reinvent the wheel. We basically saw the success of Franco-Nevada, Wheaton Precious, Sandstorm, all these great royalty companies in the precious and base metals space. So we just took that model and brought it to uranium. Now, it's not as big a market, but we are the only ones purely focused on royalty and streaming in the uranium space. So that does give us an edge. We understand uranium. We understand the risks and the rewards better. It doesn't mean that royalty companies couldn't interlope into particular royalty opportunities, and we've seen that. But I think we get the business and those risks better than someone who's generally focused day to day on copper or gold royalties. And we also got in at a time where the industry was still very depressed. I mean, we weren't out of the bear market when we launched. But what was great is all of the royalties that we acquired in our initial, around the time of the IPO, we acquired all of those for less than 0.3p to NAV, because no one was valuing uranium assets at that time. And so now, going forward, the industry's recovered, demand is strong, and the gap is very real in production. So now it's really trying to identify what are the companies that are best situated to be filling this gap in the next 5-10 years. And listen, if you can bring on a mine between now and be producing by 2030, you're a bit of a unicorn. I mean, that's the sweet spot. And they are very few and far between. But we are talking to the obvious companies that fit that category, and we're also looking at some that really aren't in anyone's radar. I mean, we're looking at byproduct operations where the main commodity might be gold or copper or nickel, and there's uranium that could be produced as a byproduct. But when uranium prices were low, it really wasn't an issue. But if we can come along and provide the financing to a byproduct producer to add a uranium circuit, and we can take a portion or even all of the uranium output and do that without impacting the balance sheet of the miner's core business, that's a good model. And so we're looking at opportunities like that, but we're also the obvious early movers in the uranium space that need to come online. There's a number of others that you may not be immediate producers or cash flows, but in a bull market that we're in and going to continue to be in going forward, their business models are going to really push ahead too. So we're not afraid to invest in companies that might not cash flow until 2030. Right. That's fine. But we do recognize that investors want to see near-term cash flow growth. And I think if I look at our current forecast of cash flow under our current portfolio, if we didn't do another deal, and again, I caution that all of the factors that determine these cash flows, 100% of them are outside of our control. We don't operate those mines. We don't make the decisions. And obviously the uranium price has an impact as well. But as we sit today, the current portfolio is expected to cash flow around 10 million Canadian by 2027, 30 million by 2030, and 50 million by 2033. So, that's a pretty nice curve in growth in revenues and cash flow. And it's not surprising. I mean, if you think about, just take the royalty we have on Rough Rider, which has found new life and meaning in Uranium Energy Corp's
Mhm.
portfolio rather than being kind of stuck in Rio Tinto's. But we have a 2% royalty on that mine's output, which means we receive 2% of the value of that production as it comes out of the ground. And if that's a 6 to 7 million pound a year uranium producer, say 2030, 2031 onward, you begin to see, in a 80, 90, 100, $120 uranium market, you begin to see how these cash flows really crystallize going forward.
It's very important when looking at a royalty company
Yeah.
to analyze their sort of 5 year and 10 year plan, because you can look at the current business model and miss the point that you're allocating cash today for a future return. I just want to spend a minute on that. I have Randy Smallwood on the channel about once every 6 months. So my audience is quite familiar with the business model
Mhm.
from a precious metal standpoint. He's a streaming company, but it's very
Yeah.
similar to what you do. You're allocating, you're financing these projects today in exchange for a percent of the value they generate in the future from production.
Yeah.
And the advantage to this, that like the strategic advantage and competitive advantage that you have, is that if commodity prices, you do a deal today at current commodity prices, and in the future, if commodity prices go up, you benefit from that increased revenue.
Yeah.
But sometimes commodity prices go up because we're adjusting the measuring stick, being US dollars, and inflating the currency. And
Mhm.
sometimes the commodity price goes up, but the input costs go up as well.
Yeah.
And as a consequence, you can see rising prices of gold or uranium, but margins don't always reflect that if
Yeah.
the input costs rise accordingly. You're protected from that because you do a deal today, right? And you don't carry any of the operating costs. You
Yeah.
allocating cash today, and you're generating that return when they're in production. And so you're protected from that. It's very important to recognize that.
That's the magic of royalty and streaming. And yeah, I mean, legends like Randy Smallwood, Pierre Lassonde, I mean, these are our spirit animals that are guiding this company. And we just want to we want to emulate what they've done in that space in the uranium world. And it is true. I mean, we do have some net profit interest. Like
Okay.
the Cigar Lake royalty is a net profit interest. So it still is working through some of the, call it an expense bucket, to get to that payout on the net profit interest. But when it does, and we kind of depends how much they're producing and what that product's being sold for. But they're getting to a point within 2-3 years that could throw off 4 or 5 million on its own. The McArthur River royalty is a gross royalty on top, which is exactly what you've described. And instead of getting a percentage of the value, we actually get pounds of uranium book transferred to our account at
Yes.
Cameco's Port Hope Blind River facility. So yeah, we definitely love the gross revenue royalties over net profit interest because you are protected to capex blowups and inflation.
Yeah. Okay. So 24 royalty agreements right now,
Mhm.
and 3 or 4 are in production.
Yeah, so MacArthur River's in production, Cigar Lake's in production, Langer Heinrich is in production. We're beginning to get, it's a smaller royalty there, but we're beginning to see cash flow under that. Probably the next one to start up will be the Lance mine with Peninsula Energy in northeastern Wyoming. As they ramp up, we have a 1% gross royalty on all the production, and areas of the mine we have 5% coverage. So if they produce 1 million pounds annually, we're getting 1 to 5% of that value of that production. So those are kind of the most immediate. We're beginning to see some of our. We have a whole host of conventional mine royalties in the Colorado Plateau of Utah, Colorado, New Mexico, and Arizona. And obviously, with strong markets and also some of the added benefits of rare earth minerals and vanadium in that part of the world, we're seeing some of those mines now of Energy Fuels, Western Uranium, Anfield, and others in that part of the Western United States. So, some of the more recent acquisitions. I mean, we did acquire an interest on the Millennium deposit which is always mentioned as a future mine for Cameco, in the next wave of mine development for Cameco in the Athabasca Basin. To have an interest on Millennium's great. Dawn Lake is an exploration project, but it is, literally the extension of the Hurricane deposit that IsoEnergy, has been so successfully drilling out. And so you got to look at it as a portfolio. You have some near-term, mid-term, and longer-term cash flowing assets, but you just keep adding. And that's, I'm asked what's the most important thing I can do to create value is really just grow that portfolio. And so hence the need to go to places like Perth, Adelaide, Cape Town, and really make sure that we're understanding, what the industry needs in terms of capital. We're competing with their debt and equity sources of capital for project finance, but I think you've seen, I won't name names, but there's been some equity financings of new mine developments with massive dilution, just kicked 25% off the share price of these companies that have raised relatively small amount of money. To see that kind of dilution, we would like to say to those miners and developers, hey, especially in a stream with uranium at $90 or $100 a pound, you don't need to encumber a lot of your future production to get $25, $50 million today in financing with zero dilution and not all of the strings attached that debt financing or bank financing would come with.
Yeah, you're a third option, right?
Yeah.
And at present, the only one, as you mentioned, there's no other pure play uranium royalty companies that are doing this yet.
Right.
Yeah.
Right.
And you've got
first we won't be forever if it's such a great idea. But there's, we've been very disciplined too, being the only player. I think we studied a lot of kind of case studies of royalty companies, what they did right, what they did wrong. One of the failures that I've seen in those case studies was being too aggressive and overpaying for royalties. If it was just putting points on the board mattered, okay, we could have 30 royalties by now. But I think we have to be very disciplined when we buy a royalty. We're not buying the company. So, it shouldn't be at 1 times NAV. We're not becoming a shareholder where we have a stake in the assets of the company that we're investing in. We're investing in a portion of their output as a royalty holder. So we've got to be very disciplined, not overpay for royalties, but we also have to be competitive with debt and equity. That's the sweet spot that we're always constantly trying to find.
Yeah. And you've been very focused on North America. I know we mentioned, Langer Heinrich in Namibia. You've got a project in Spain, I believe, but the vast majority thus far has been Canada, United States. Is that strategic? Because I know you're off to South Africa tomorrow.
Honestly, it wasn't intentional, but in retrospect, it's great with geopolitics to have Canadian and American exposure with everything going on is great. But we realize it's a big world out there. And so I am spending, we're pursuing more opportunities in the US and Canada, don't get me wrong. But I am interested in, Africa is an interesting continent where, the geopolitics is all over the map. You see the problems that they've been having in Niger. There's countries that are investable in Africa and some that aren't. But we want to make sure that we understand and we don't miss any opportunities there because Africa will contribute to this market going forward. Australia, I think, we'd love to have more exposure there. And Australia really is underdeveloped, frankly, in the global nuclear industry. They have so much uranium and could be producing so much more, but their politics of, even on a state-by-state level, have really held them back.
Right. Okay. And getting started in 2019, definitely an advantage. So walk me through the mindset of the company right now, Scott, at URC, because there's there's seasons to a royalty company where it's time, you're cashed up and prices are optimal. It's time to be aggressive. Companies need capital and you're out there hunting. And then
Yeah.
there's a time to harvest, right?
Yeah.
Where you have set your royalties in place, prices have come up, competition has arrived, the quality of deals is getting worse, and you
Yeah.
want to sit back on your portfolio. So where are you guys at
Very
from
much
mindset?
in the rapid early. I mean, we're not a newborn anymore. We're a
No,
teenager,
right?
but we're very much, our bones are still growing. And we want to just, I want to see that portfolio grow with each year that goes by. We're at 24, we're at 30, we're at 35.
Yeah.
So look for us to reinvest any sort of cash flows that come in the door. Although we start at a good place, we have 300 million in cash and liquid assets, largely in physical uranium. We have 2.8 million pounds of uranium that we shouldn't lose sight of the fact that we acquired at an average cost of, I think, under $60 a pound. So it's at a good cost basis, but that's our war chest. We'll sell uranium to buy royalties or streams or establish royalties and streams. So, eventually, though, every good royalty company becomes a dividend, producer, or for its investors. And I can't wait, for that day. But it's not today. We really need to grow and be bigger.
Yeah. Okay. You're in hunting mode. I
Yeah.
love that. 300 million in liquid assets to deploy when you see deals that you love. Is there an average deal size that you could speak to, or is there a
It's
sweet
really
spot?
interesting. I mean, we've done small deals. Acquiring our royalty on Salamanca was literally in the hundreds of thousands. Under $500,000 to acquire royalty on a mine that frankly hasn't gotten the license to move forward and produce. There's some that are in the 5 million range, but I think in terms of new project financings, I think they fall really in that $20 to $50 million range, and it may be the financing need might be bigger, the total need may be bigger, but it may be that's what we're comfortable doing.
Mm.
And we've even been in discussions with some miners, developers that might have $160 million development need, but we wouldn't do that much in a royalty. We would do a portion of it, but we have other strategic partners that might come alongside of us and say, hey, if you guys who are uranium experts like that project enough to put your own 50 million into it, we'll put another 50 million in equity and come with kind of a combo deal, or we'll introduce different concepts. We've also studied a lot of kind of structured finance deals, and trying to introduce maybe elements of convertible debentures into the royalty and streaming model. So we're really trying to be creative and come up with new products that perhaps haven't even been done before in precious or base metals.
Can you speak to the human capital that's assisting? I mean, I know you've been in the sector for like 39, 40 years and previously president of Cameco USA, like you've been in it. I know your team, you've got a handful of very strategic deal makers, which helps. So anything you can share on that front?
Yeah, I mean, we obviously have, as our chairman, Amir, is obviously a great, entrepreneurial energy behind all of us. But at the nuts and bolts level, there's a heavy element of former Cameco Corporation people. The University of Cameco has been very good to a lot of companies in our industry, and former Cameco people are running all the companies in the uranium space around the world today. We're no exception where on the technical side, due diligence is probably one of the most important things we do, is that through that due diligence, we identify what are the right projects, to pursue. And when we're in that pursuit, what's the right price to pay for royalty and stream? And so guys like Darcy Hirschkorn, who was over 20 years in Cameco Global Exploration, is really a valuable teammate of mine, where he'll scrub the drill programs. We won't just take for granted, the resources that the management says. We'll go, okay, did you go through the right regimen in determining those resources? Are they really there? then when it comes to like assessing, well, can this be mined efficiently and profitably, I bring in James Hatley, who was the mine engineer at Cigar Lake and McArthur River with Cameco. He looks at the mine plan to say, yeah, that's doable, that's logical. Maybe looks at the time permitting and permitting timelines, which sometimes management can exaggerate how quickly a mine can be permitted and licensed. And we'll put a bit of reality overlay on that and say, hey, we love your mine, but we think it's going to take a few more years to permit and license than you do. But that's valuable. That's stuff we bring that someone who's coming from another commodity, wouldn't have that kind of perspective. And that might cause them to lose opportunities, or it might cause them to overpay for opportunities. But due diligence and most important thing that we do, and I have a good small team to help me with that.
Yeah, what's compelling about it to me is we talked about the sort of global shift that's creating demand, whether you're looking at new build outs in China and the United States, whether you're looking at the biggest companies in the world deploying capital into nuclear generation for their own enterprise. And you want to go further upstream. Like, how do you supply how do you supply the picks and the shovels to where they're going to be needed? And then in a world of kind of crazy monetary policy, how do you protect yourself against inflated input costs, right? And that's sort of a case to be made, I think, right, for URC, is that's the angle.
Yeah, well, the mining industry is so famous for CapEx blowups in recent years. Inflation has not been kind to, a lot of deposits around the world. The royalty model is more applicable now than it ever has been. And we're very we're grateful that we did launch when we did. It might have been early in the cycle, but we've also learned a lot. We've learned a great deal more of sophistication in structured finance, in royalties and streams. Full disclosure than maybe when we started out, and I think it really helps. And I enjoy personally being able to come alongside I know what it takes to build, to acquire assets and build uranium mines as being part of, Uranium Energy Corp. I know how hard that is, but I love going to other miners, developers. I get what they're facing, and, to come alongside and say, hey, I've got a solution for part or all of your development finance needs. That's really enjoyable. And at the end of the day, you're doing this to see more uranium being produced around the world, and the world clearly needs more uranium.
It seems to. Yeah, sure does. And you're right, the capital blowouts, or just the, even in the precious metal sector over the last 4 or 5 years, we've seen a handful of almost great mining projects, right, that stumbled at the final yard line, right? And it can happen. And what's so important in this industry is optionality, right? Like, my audience is all over the spectrum in terms of risk, but even the exploration investors know, like, those single asset explorers, those are the biggest gambles in the game, and, proceed with absolute caution. You need optionality because things can go wrong, not just from a geological standpoint, but yes, from a capital standpoint and from a jurisdictional standpoint. There's all these variables and more, right? And you want to diversify that risk as much as possible.
Yeah, and that's an important part of the royalty model. I mean, let's face it, we're going to have assets in the portfolio that underperform our expectations. That's inevitable. But we're going to have some that outperform our expectations. And again, it comes back to that due diligence. If we've done the right things to pick the right companies to put into the portfolio, we'll have more winners than losers. And again, it does spread the risk out of any single mine failure.
I'm excited about what you're building, Scott. I really am. And I also really appreciate just, getting context and picking your brain on the sort of bigger picture nuclear landscape right now, because I love, and it's factoring more and more into the geopolitical conversation in a big way. And I don't think we should sleep on that. The major paradigm shift, the rise of the private energy empires, whatever you want to call it, but that's also occurring, and it's really important news.
Yeah, listen, I've been a long time uranium bull. That's clear. But I don't think in my 41 years I've seen this combination of geopolitics, green energy transition, energy demand growth, tech companies, all all of this coming together, and just then the nuts and bolts of supply and demand. I mean, we still have a very significant deficit. Even if there wasn't a data center built, we still have a 50 million pound deficit to what the market needs annually currently.
Yeah.
So,
Yeah.
the data center story is just literally cream on the top, but it is a very real force. And I think you'll see more announcements of investments in nuclear. And, I wouldn't be surprised if they come downstream into the fuel cycle as well.
Yeah, no doubt. No doubt. Okay. Since you used the word light speed 3 times in the first 10 minutes, I want to have you back in a few months and get caught up again. But in the meantime, Scott, enjoy Washington. Safe trip to South Africa, Cape Town. And I look forward to catching up again a few months down the road.
Excellent. Thanks, Jay. Pleasure to be with you and talk about some pretty exciting times in our industry.
Yeah,
Thanks.
100%. All right.